All right, good morning, everybody. So, Andy, what I'm trying to do here is break it down to the lowest common denominator. Just real simple. There is no pretty strong, right? That's like kind of HIV positive. It either is or it isn't. Um, and if the fib had gone all the way, that's what got you, and that's fair, right? But the cool thing is the fib was definitely there. Good morning, good morning. You are amazing. How we doing, guys? Do we have sound now? We there? Good morning. Good morning, good morning. So Andy, what happens, man, is as long as it hits that line, even if the line doesn't continue, that line is there. By the time it's gone, you're all the way down here, right? So let it be basic. Small triggers don't break. It rolls. You got it. It was a good read. It's definitely a strong top because it fits the rules. And that's really it. And then that's what sets you up for that potential next trade. So good morning, everybody. Good morning, Pete, Andy, Luciano, Ron, Erla, Troy. Good to see you. V. Troy. Welcome to the room. Nice to have you guys here. Let's do this. Sorry, I always get on little tangents in the morning. It happens sometimes. You got sound, Rob? Love it. Yeah. I was still muted. I was setting up, getting ready to talk. Doing my breathing exercises. All that good stuff. I look like Ron Burgundy in the morning. The Human Torch was denied a bank loan. It helps me speak clearly for you guys. Let's check news, guys. 9 a.m. right now. There's the CS composite. And then at 10 a.m. Man, we haven't seen this one in a while. It's a cheeseburger confidence. Good morning, Dunk. Good to see you again. CB consumer confidence, guys. High impact at 10 a.m. And at 10 a.m. the market may bump, jump, spike, twist, rotate, do all the things that we don't want it to do. So one of the things that I do every morning is I come through and I click on forexfactory.com. Guys, can you hear me? How about now? Can you hear me now? Andy can hear me. Ron can't. V. Troy. All right, guys. So if half of you can hear me and half of you can't, if you can't hear me, it's probably you, since others can. Leads me to believe it may not be my audio, but I'll reboot. So those of you that had to listen to that, sorry. Let me do a quick little something, see if we can go through. Yeah, I don't think it's on my end, but I'll do this anyway, just in case. So sit tight, guys. Usually when I do this, you can hear me before I ever even start the room again. We'll see what happens. Hopefully you can. Education room, join the stage. What do you think? Can you guys hear me now? Cool. Usually, guys, if one of you can hear me, then it's not me. But that's okay. If this helps, then that's good. Then we'll do it for sure. Every day, guys, I check news. Every day I come in and I make sure that there's not something going on. Bueno is good, Rob. It means good, literally. And then everything that I'm going to talk about is same stuff I talked about yesterday. Actually, the same stuff that I'm going to talk about tomorrow. And then I'm going to talk about every day for the rest of my natural life, I think. It comes from the trading guide. And our first trade, guys, not our only trade, but rather our first trade, and what we cover in the first hour every day, is what we call a high probability trade. This is a trade where each indicator on every chart agrees for the rules for the trade. Guys, this is the best of the best. This is the one that typically wins 70 to 80% of the time. This is the trade that has all the advantages. This is the trade that teaches you to read your indicators. Guys, this is the beginning for you. This is the one that just really sets you up for success. In this high probability trend trade, guys, the number one goal of this trade isn't to make you just rich beyond your wildest dreams, but rather it's to teach you to read your indicators, to look at your charts and begin speaking to yourself in terms of advantages, not looking for the trade, but rather looking for the rules being met so that you know that it's time to take a trade. Chart reading is about 90% of your day, and 10% of your day will be actual trading, guys. In chart reading, once you can do it, and everything starts on your big chart, once you can look at your large chart, guys, and make a couple judgment calls based on what you see, you're going to understand where the market is likely to continue. You're going to understand where it's likely to go. You're going to understand where it's likely to stop. And you'll be able to put yourself in a position to take trades that are really nothing more than an accumulation of advantages. The high probability trend trade, as it's taught in this room, guys, is only 3 rules. Each rule gives you an advantage. A trade is not your desire to win. It's not your need to pay rent. A trade is not your kids needing tuition. Guys, a trade is nothing more than a couple advantages coming together, and each and every time you follow your rules, you are taking a trade that has been proven to win more than it loses. You're taking a trade that creates a statistical advantage, guys. So 3 rules, 3 advantages, 1 trade. That's it. This is your first trade. We're laying some groundwork for your future as a trader. These 3 rules come together on only 2 charts. There's a big chart and a little chart. Large chart, small chart. And on the large chart, it's a slow moving chart. It's a very broad stroke of a brush. It will define the direction of the market. It's going to define the momentum in the market. It's also going to define the areas that you're looking at. And this very broad stroke of a brush, guys, rules 1 and 2 have to be met on this chart before you even start hunting for entries. But your entry chart, when the rules are met, is a smaller, faster chart. It's going to show about 20 to 30 bars for every 1 bar that you see on the large chart. And this allows us to buy or sell pullbacks, to get in at areas, to reduce risk, to maximize profit potential. And that's what rule number 3 does for you initially, guys. Rule number 3 is nothing more than defining where the market is most likely to continue. Let me backpedal. Once you are good at momentum and clear path, once you can understand rules 1 and 2, your rule 3 is going to change. You're going to find more and more ways to take advantage of the market. But initially, we're going to keep it very simple. We're going to give ourselves the highest probability of success. And I want you guys to learn to speak to yourself in terms of advantages. Every time you look at your chart, I don't want you to say, hey, is this a long trade? I want you to say, do I have momentum? Is there a clear path? There is? Cool. Let me find my entry in an area inside of favorable large triggers. And if you start associating the language of the rules with the looks on the charts, it creates this amazing cohesion that just, it's amazing. It's amazing, I tell you. I sound like Trump. So who are you trading with or against? Ask yourself that. Big charts, they define the areas of the market. The place where the people that move the markets may enter, may exit, may fight. The big charts define the momentum of the market. The momentum is created by the men and women who have the financial capacities to create trends and direction and momentum whenever they see fit. And guys, let the large chart lead the way. I'm getting that stitched into a pillow right now. Let the large chart lead the way. Let the large chart tell you that it's time to look for a trade. And if your large chart says up, it's up strong, there's nothing in the way, there's always this small crowd. And this is your small chart. And this small crowd forces a pullback. This small crowd creates little fluctuations that rarely sustain. Small crowd fails 70 to 80% of the time, which means that 70-80% of the time when you enter at their failure point using rule number 3, you're more likely to win. So we're going to keep it real simple, guys. We're going to go with the flow. We're gonna focus on 3 rules. We're going to let language be very, very important, and we're going to associate the language with the looks. And the easiest way to get to where you want to be is post in the room. Post your pictures, post your questions, post what you see. I give you this every day, guys, how to annotate your charts. I give you another picture right inside of the spreadsheet that I share every day. How to annotate your charts. If you want to get the most out of this educational process, guys, talk to me about momentum, talk to me about your path, and show me your entry, because we'll work together to make sure that you're reading your charts the way you should be. The second thing is just recognition creates repetition, and Nexgen provides you with a spreadsheet. And there's 4 tabs on the spreadsheet. I'll drop mine in the room right now. Your first tab is your trade tracking sheet, guys, and this is where the instructions are on how to paste pictures into the room, how to use those hyperlinks. There's the instructions again on how to annotate your charts for the best feedback. And all this is a trade journal. Every time you take a trade as a new user, and I'm going to tell you, you're going to lose a lot as a new user because you're learning rules. It's okay. Every loser is a lesson. The goal is that you post that loser in the room, that we talk about it, that we make sure that we adjust your thinking if it needs adjusting. And that's what the first page is, guys. You're going to be able to come back and study this every day and see what you did well and where you need to work. The next tab is the 101 tab, and this is the 3 rules of the high probability trend trade, and they're broken down individually. Strong triggers, clear path, and an entry. And what this does is this creates recognition on the look. Hey, this is what it looks like to have my rule number 1 met, rule 2 met, rule 3 met, and then of course you want to see the other side of the coin. This is what it looks like when the rule isn't met, when I forfeit that advantage. So that's all there for you. And then there's a favorite looks. As you begin to recognize patterns outside of the high probability trend trade, you'll be able to begin to create your own personal plan. You'll be able to create your own management plan. You'll be able to begin to recognize patterns that repeat themselves. But until you're capable of doing this, guys, I'm going to give you a rock solid plan that optimizes your chances of success in the very beginning. And then finally, this is just a study sheet. This is putting, I don't know, 500 or 600 pictures in the same location. All the green sections are just clients using software. 99% of them are annotated, and almost every one of them revolve around momentum and some sort of clear path. There's some NASDAQ stuff in there, high probability trend trade entries, different management ideas, patterns that repeat themselves. So your goal should be to make your favorite looks section look a lot like the client trade section. And guys, taking pictures is what's going to get you there. Over and over, taking pictures. And every time you take a picture, you talk about your path, you talk about your momentum, and you discuss your entry. I'm studying some new stuff with John Novak this morning. I want you to see this. This whole lineup is from this morning. And that's not even the beginning of it, guys. This morning, as we study new patterns and new looks, what is today? The 27th? Well, we started yesterday. These are the 26th. So starting right here. And that's 1, 2, 3, 4, 5, 6, 7, 8. So I've got 8, 16, 24, 32, 40, 48, 54, 62, 70, 78. Guys, I've got almost 90 pictures in the last 2 days. Almost 90 pictures, annotating charts, looking at different rules, solidifying what it is that I'm looking at so that I know how to find it next time. And I'm telling you right now, the people that take the most pictures that annotate charts, you'll be floored at the results that you get. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to keep it very, very simple this morning and only focus on 3 rules for 1 trade. Simulate, practice, post your pictures in the class, get feedback. That's the second half of class. The first hour is nothing more than rules. The second half is me clicking on all these pictures that Rob and Paul are posting in the room. And of course, they have them annotated about momentum, path, and entry. and we're just going to go through and see what we come up with. We're going to simplify. It doesn't have to be hard. Trading doesn't have to be difficult. And to be honest with you, most people make it more difficult than it needs to be. Most people start changing rules in their head because they think more is better. We're going to keep it very, very focused and talk about that high probability trend trade. Your job is to know what looks you commit to. What does it look like to have your rules met? That's where the pictures come in. And every time you take a trade, guys, you should be able to talk about the momentum on the chart, no matter what kind of trade it is. You should be able to talk about whether or not you have an area in the way or if it's clear, and you should be able to define your entry, guys. So we're going to start, and we're going to start on rule number 1 because it seems like a great place. Rule number 1 says that the large chart must have strong triggers, guys. Momentum leads the way. Momentum carries a market, and momentum's pretty easy to recognize. When the background is green, the trend is up. When the trend is up, I'm only looking for rules to be met for high probability trend trades long. In order to have strong triggers in an uptrend, my small triggers, the solid lines, and my large triggers, the dashed, must be separated, guys. The small have to be above the large. Both have to be wide and angled in the direction of the trend. There is zero momentum in flat triggers, and the space created between small and large lets me know that the odds are favorable for the market to continue up. You're going to see it in the room, odds favorable momentum all day long, OFM, and there's only one look. Same color, separation, wide angled in the direction of the trend. Hey, zip it, doggo. Ellie loves momentum. In a downtrend, when the background is red, guys, small triggers have to be below the large triggers. Everything has to be wide. The space between the two lets me know that the odds are favorable for the market to continue down. Once again, odds favorable momentum, guys. That's our battle cry. That's what sets us up. Odds favorable momentum carries a market. It can break key areas. It can cover mistakes, guys. And there are plans out there that revolve solely on momentum. And the opposite of momentum is weakness, is strong, weak, right? Odds favorable. Anything can happen. When the small triggers work their way back inside of the large triggers, guys, if the larger green and the smaller red, if the smaller green and the larger red, you don't have strength, you don't have momentum, you don't have that first advantage. And when the smalls are all the way inside of the large, guys, we call this a weakening of the large triggers. Anything can happen up or down. This is where areas start to hold. This is where retracements happen, guys. And you've got to know the difference between strength and weakness. And this is a one picture lesson, guys. Here's your crude oil right now. And I love this. Strength breaks areas. Weakness, look at the retracement. Strength breaks areas. And it really is that simple. And you can go back on your charts and you can see these strong trigger looks both direction, and you can take a picture and you can annotate it, and you could literally do this 25 times to make sure that you never miss it. Watch this. From one picture, let me tighten this up so we get to weakness as well. Firm believer that pictures create awareness. So I'm going to take a picture and I'm going to say smalls below large, both wide, space between, strong triggers, momentum, rule 1 met. I'm throwing all this, the looks, what it means to have it met, what it means to me as an advantage, and I'm going to do the same thing down here. Smalls inside of large, weak, no strength. Why not be redundant? Rule 1 not met. Anything can happen. And guys, this is how you're going to build your repetition. This is how you're going to get good at this. The ability to trade typically doesn't come from taking trades. Your ability to get good at trading is going to be based on your ability to recognize advantages, guys. So there is more dividends paid through going back historically, committing looks to memory, and then practicing what you've studied rather than hoping as a brand new user to always get it right, to put yourself in a position to make money before you've bothered learning the process that yields money. So is everybody good with rule number 1? I like to ask. If you're not good, this is your opportunity to tell me. I will backtrack and hit momentum again, and we'll look for a different picture, and I'll say it a different way. Otherwise, I'm going to move on to rule number 2, which says that termination conditions must be false. Erla, I'm glad you got it. Termination conditions must be false. This means that I'm going to have room to my profit targets. We're going to call this the advantage of a clear path, guys. A clear path simply means that we're not trading into an area that may stop the market. These are the areas on your large chart that may stop the market. I'm dropping that in the room for you guys right now. One is not more important than the other. I can't stress this enough. If there is a horizontal line on your large chart, it may stop the market. It could be a divergence high or a divergence low. It could be Fibonacci support or resistance. It could be yellow 1-to-1s, and in some cases it can even be a mid-band. And all of these lines are where the large crowd, the people that move the market, this is where they're making decisions. This is where they may enter, where they may exit, where they may just fight for a little bit. So I would encourage you, as a brand new user, to stare at this picture for 5 minutes and just know what the lines look like. And then to determine whether or not they're likely to stop the market, we're going to use the trigger lines. The trigger lines are going to tell the story. The lines let us know what to look out for. The trigger lines will let us know if it's problematic. So if decisions are being made at key areas, the first thing we're going to do is we're going to let price reach an area, meaning those dynamic Renko bars work their way all the way up to resistance or all the way down to support. And when price reaches an area, the only thing that you have to do is ask yourself, where are my triggers? And if they remain below resistance, resistance is behaving as a termination condition. It may stop the market. It may create an untradeable bounce, and it might just set off a fight. And you'll see very often around these key areas, consolidation and chop, as a lot of people like to call it, because decisions are being made. Price comes all the way down to support. The only thing you have to do, hey Miss Cindy, nice to see you. The only thing that you have to do is ask yourself, where are my triggers? And if your triggers remain above support, guys, support's a termination. No trades into that area. It may stop the market. It may create an untradeable bounce. And what you're going to find sometimes is that these areas create such a profound bounce, such a huge reaction, that they actually reverse the market. Guys, if your termination condition that none of the triggers broke through makes those large triggers roll and go the other direction, you have what we call a strong top. And if you hit support, and support is so powerful that it reverses the market, it gives us that roll, guys, you're going to have a strong bottom. And a strong top or bottom is the precursor to the highest probability trend trade that you can take. So not only will it say no long trades, no short trades, but it'll also turn it and say, let's look for the best of the best trade. And guys, termination conditions are going to happen all day. Let's open up that large chart. Let's see if we can find a couple. How about resistance to support, to resistance, to a divergence low, just about right off resistance, and this whole big move to the upside? Wow, that's a big move. And it starts at support, guys. And it starts right at support to the tick. You know exactly where these areas are. And even in the moment, do you see how price is going up and down? And these dances are happening right at fibs, guys. Respect the idea that more often than not, these are going to pull money out of your pocket. That more often than not, you're going to lose a trade trading into an area. As you grow with the software, you'll figure out times when it's okay. But in the beginning, let it be very simple. If price reaches an area and the triggers remain above or below, don't take a trade. And every line, guys, is going to be a termination condition, at least for a moment. So everything is down. I have odds favorable momentum. Price reaches support. The triggers are above. Sit on your hands. Wait for the decision. And then your small triggers smash through that area, but the large triggers are still above it. Guys, this look with odds favorable momentum lets me know that the area has the potential to break. But areas are not broken until both the small triggers and the large triggers get south of support or north of resistance, guys. And at this point, the area is considered broken. Support begins to behave as resistance. Resistance begins to behave as support. And guys, there's two options for the brand new user. You're either trading into a termination condition or your path is clear. And your path is clear only until you reach the next line. And then once you reach the next line, it starts all over again. And this frustrates new users because you wait so patiently for this path to clear, for the small and large to get above, and it trades directly into the next resistance line, and you've got to start all over. Where are my triggers? They're below. Dag nabbit, I still can't go long. My path isn't clear. And some days, guys, they're going to be so stacked, and it happens, that you're just going to have to sit on your hands. And this is where you have to remind yourself, 90% of my day is doing nothing. 90% of the day, it's okay to do nothing. 90% of the day, I don't have the advantages I need to feel good about risking my money. And guys, the futures markets trade billions of dollars every day. You don't have to be in every move. You don't have to catch every fluctuation. You don't have to hope and wish and want. All you really have to do is wait for those very simple advantages: momentum, clear path, and then find your entry. And rule number 2 is going to keep money in the bank. Rule number 2 is going to keep you patient. Rule number 2, and Fibonacci, it gives you the ability to see where the driving forces of the market are likely to make decisions, guys. And very often, rule number 2 will keep you out of consolidation and chop. And again, 90% of your day, guys, just let it work itself out. It always does. I've never seen a market flatline in the history of my time with the indicators. That's not true. I did see crude go to 0 a few years ago, but then it went right back up. So rule number 2, guys, and once again, I would encourage you, go back and take pictures. Guys, wear your cameras out, please. Watch this. I'm going to draw an arrow. So how do I know if it's a termination condition? The first thing, price reaches an area. So every time you're looking for a trade, you should ask yourself, did price reach an area? Where are my triggers? Below? Term. No longs. And all that does is it keeps you from breaking rules. It keeps you from trading into areas that may stop the market. Even with odds favorable momentum, guys, this market stopped cold. And guess what? The same thing happened right here. And if you go back on your large chart and you just start looking at how many times fibs stopped the market, you're going to begin to respect it. Hopefully, you're going to stop trading into them. It just happened again, guys. Pulled right up to resistance, not one trigger broke, and look at the reaction off the market. So is everybody cool? Lines on the large chart can stop it. Lines on the large chart are where decisions are made. Lines on the large chart are going to keep you from wasting your money trading into areas that may stop the market. Yep, good. So when the rules are met on the large chart, when you have momentum, when the path is clear, guys, you've got to go to the small chart to look for an entry. One time on the small chart where rule number 2 isn't met. The only time when the path isn't clear on a small chart is if you get 3 divergences in the same price range. If the rules are met on the large chart, momentum is there, the path is clear, and you turn to the small chart to look for an entry and you see 3 divergences at a low or 3 divergences at a high, you have to pump the brakes and say my path isn't clear. The only termination on a small chart. But the cool thing is, we're usually using it just for entries, guys. We're using the small chart to focus on where the small crowd is likely to fail. We're using a small chart to refine, to reduce our risk, to maximize our profit potential. And guys, rule number 3 is so precise that we're going to use a limit order. We're actually going to be able to wait for the market to come to us, and we're going to do it at areas, fibs, mid-bands, and yellow 1-to-1s. And we want those areas to be tucked inside of what we call favorable large triggers, guys. And again, this classroom is designed to give you the best, not the only. It's designed to give you the first, not the only. And as a brand new user, your highest chance of success comes from those areas being inside what we call favorable large triggers. And that just means that on the small chart, the large triggers and the synthetic triggers, it just looks like 2 large triggers. They're overlapping, one on top of the other, like 2 snakes riding piggyback, guys. If they're different colors, they're not favorable. If they're separated from one another, they're not favorable. Favorable large triggers takes where we expect price to return on both charts. We expect price to come back to the large triggers. So your large triggers on the small chart are always on the small chart, and your synthetic triggers, the step triggers, are just the large triggers from the large chart. So you're taking the correction point and you're putting them one on top of the other. This is going to reduce risk. This is going to give you a higher chance of success. And guys, when there's areas inside of favorable large triggers, you pinpoint, you define exactly where the market is most likely to continue. And when those triggers split, guys, when the large break away from the synthetic, when it looks like they're going different directions, you're losing advantages. Your risk goes up, your accuracy is decreased. So brand new users, I'm going to encourage you. Areas inside of favorable large triggers, it's the best of the best. As you grow with the software, when you start getting reps in, when you start getting feedback, when you've been practicing and simulating, you may find an opportunity or a way to take this split trigger look. But in the beginning, that's your best of the best. And it makes it easy to pinpoint the window of opportunity, the point where the market is most likely to continue, that area where the small crowd is most likely to fail. So when the large crowd says up, when the large crowd creates momentum, when the large crowd has no areas in the way to react to, we're going to turn our attention to the small crowd, guys, and they're going to be going up with them. And then one of them's going to get a wild hair and say, you know what, let's fight. And that's your reversal bar. Your reversal bar signals the beginning of the pullback, that retracement. Your reversal bar isn't your entry, guys. Your reversal bar is nothing more than a sign that we need to look for our favorable large triggers. And your favorable large triggers, large and synthetic, one on top of the other, that's your red box. That's a pretty big area, even though they're stacked. So now we're going to refine it even further. Precision. Areas inside of favorable large triggers, guys, and it's going to create a window of opportunity. And your window of opportunity will extend from the highest point of support to the lowest point of support inside of favorable large triggers. And this blue box represents the point where the market is most likely to bounce, where it's most likely to continue, where the small crowd is most likely to fail. And guys, it may stop at the top, it may go to the bottom, but we're going to get in. We're going to get into the market a couple ticks above the highest point of support, because remember, the large chart has odds favorable momentum, and the large chart has absolutely nothing in the way. But this is what you've got to be okay with, and what you have to accept, is that the small crowd, let's get that one out of there. The small crowd is going to fight. They always fight. We're going to catch them at the top. We're not going to trip over a couple pennies to save dollars. But guys, they may push all the way to the bottom of that window. They may push all the way to the bottom of those triggers. But the bottom line of the triggers, guys, as long as they are inside, they're still at the point where we have an advantage, which means that anything below the lowest point of the triggers is no longer advantageous. Our edge is gone, and we're going to put stops here, not going to look to enter the market at areas on the wrong side of the triggers, because honestly, once they get past those trigger lines, I have no idea where they're going to stop. I don't know if it's going to be 20 points lower or if that fib's going to miraculously hold it. So the advantage is gone. And the same is true in short trades, guys. Reversal bar signals the beginning of the pullback. It's not the entry. You define your large triggers. Large triggers are not the entry. The area inside. In this case, there's one line, one point where the market is most likely to continue. Your entry order goes a couple ticks below it. And guys, this mid band is a moving average. As price comes up, it's coming down. You may have to adjust your entry once or twice. And if you get in, guys, that's it. Every one of these lines beyond the trigger lines is outside of your window. It's not where we expect the market to go. So if the market gets a few ticks above it, 4 or 5 ticks above it, guys, our edge is gone, our advantage is gone. So your ability to pinpoint where the market is likely to continue is going to set you up for management. And this will be the first step in management. Not where you put your stop, but how well you identify the point where the market is most likely to continue, because you're going to say with the utmost confidence, this is where it should bounce. This is where my advantages lie. And your initial stop will go 4 to 5 ticks above all the trigger lines. And guys, you're going to hear this in the room all day long. Where the market shouldn't go. It shouldn't go beyond those triggers. It shouldn't go beyond those areas inside if this is going to be a part of my 70 to 80%. So if it does, if the small crowd has it in them, guys, let's get out of it. Let's not put giant stops on failing trades. It's okay, you're going to take a little hickey 20 to 30% of the time, mathematically obligated. But more often than not, you're going to get a reversal bar in the direction of your trend. And once you do, you can reduce risk a couple ticks above it, a couple ticks below it. And it's not at all unusual to see Nexgen users taking the perfect trades, having 3 to 4 ticks of risk, and maybe things don't work out, and they take these tiny little losses. And that's really the high probability trend trade, guys. It's 2 charts. It's a large chart defining the trend. It's a large chart defining the momentum. It's a large chart letting you know whether or not you've reached an area that's problematic. And when the large chart says go, the market is trading all the way up here. And your fear of missing out is going to kick in. And then the small crowd fights. And you find your areas inside of favorable large triggers. And guys, this is the best of the best entry for the high probability trend trade. This is the one that you have to commit to memory. This particular slide is showing you exactly how to study it. When the rules are met on the large chart, guys, circle the tail. This is historical. This is going back. This isn't taking a trade. This is recognizing a pattern. Circle the tail. If the tail lines up with support inside of favorable large triggers, you have a high probability trend trade. So let's go back and see if we can find a tail, guys. That's a tail. And I'm just going to get in the habit. This is how I'm going to study. I'm just going to circle tails. Maybe it's a high probability trend trade. Maybe it's not. Maybe it's trading into an area. Perhaps the area has the potential to break. But if I go back, does everybody see what I'm doing? All I'm doing is circling tails. Let's see. And then here's how we're going to study. I'm going to minimize that chart a little bit. I'm going to drop it back. And I'm going to open up my small chart. And my rules say that I have to buy or sell a pullback at an area inside of favorable large triggers. Well, this one happens to be in between large triggers. For the brand new user, this isn't a trade. For the experienced user, you know exactly where your stop has to go, and only you can make the decision on whether or not that's what you want to do. This one pulls right back into support inside of favorable large triggers. In the downtrend, directly to the mid band, just below the triggers. Once again, if you enter a little low, you know exactly where your stop has to go. But when those triggers don't line up, guys, that's not your advantage. Scrolling back, right to the mid band. It hits the top of the triggers. We know where the stop has to go. They will not all be perfect trades. But if you create the expectation of understanding where your initial stop goes, you can make the decision to get in and know exactly what you're risking, guys. And this is how you're going to study. You're just going to go through and you're going to keep doing this every day. And you're going to take a lot of pictures and you're going to look for these opportunities. And they're either going to set up or they're not. But you're committing to memory. So right now, the background is green, right? Uptrend or downtrend? Where are my new users? Let's go through the exact process that I go through every time I look for a high probability trend trade. Am I in an uptrend or a downtrend, guys? What do you think? Give me a U or a D in the room. All right. Thank you, Josh. Do I have odds favorable momentum? The background, no, Josh, you said down. It's green. We're going up, brother. Dunk, you're absolutely right. Green means up. Josh, you're looking at trigger lines, not background color. Do I have odds favorable momentum? Rule number 1. What do you guys think? Josh says no. Because remember, guys, the only way that we can have odds favorable momentum, hold on, let me find my picture, is if the colors match, if everything is green and going up, if everything is red and going down, and more importantly, if the small triggers are below the large when everything's going down. So guys, my smalls are on the wrong side of the large triggers, and all of my trigger lines are above support. Do I have a clear path? And we're doing this a little slow right now, right? We're talking through it. We're talking about advantages. We're identifying the trend, the momentum, the path. And guys, here's the beauty of it. Without momentum, without a clear path, we're looking at that 90% right now. We're looking at that 90% where there's just nothing to do. Hey, good morning, Kenan. And the market changes. And now we're in your downtrend, Josh. But we still don't have a clear path or momentum. Weak bottom over here, Kurt, right? How about this one, though? How about resistance, where everything continued down? That's a good look for a top. And now we're starting to get momentum. And guys, this is what you're going to do. You're going to watch the market. And you're going to say, damn it, divergence low. Let's see if we can get the small triggers to the other side of it. And if we can, well, then maybe I can look for one of those medium probability trades. So guys, you've got to be able to take these looks. Large chart. Do I have momentum on the large chart, guys? What do you think? Smalls below the large, larger wide, angled in the direction of the trend. Look at that gap between the two. That's the best of the best look of momentum. But my small and large aren't through the area yet, guys. 50% have made it and 50% have not. And it pulled right back to the area right at the triggers. But guys, my path is not clear. And this is what you have to say to yourself. The path isn't clear. And I'm getting these losses of momentum. And sure enough, it's pushing right through my triggers, guys. This is the biggest killer of areas that only have the potential to break. That 50-50 look. So what we're going to do is we're going to create recognition. First and foremost, you guys have to be able to understand what it is you're looking for. Strong triggers, weak triggers, clear path, termination, and entries. Guys, this is chart reading 101. If you really want to be good at this, you should do this. If it feels like too much work, day trading may not be for you. I shouldn't say that. Guys, chart reading 101, you have to recognize these looks so that you can identify them in the moment. The market is not going to pause for you. So committing these looks to memory and then describing why the rules are met. Why are they strong triggers? Why are they weak triggers? What's the advantage? What's the disadvantage? Guys, commit these basic parts to memory in the beginning. Fill out your 101 section and never mistake strong from weak. Clear from termination. This is the quickest way to get to where you want to be, guys. And I'm going to give you a copy of this. And I know it feels overwhelming. 25 pictures, oh good Lord. Guys, I've done 90 in the last 2 days. But 25 pictures, do 5 a day. Start simple. And then you've got to know what it looks like, guys. This is the picture of that strong bottom. Termination that reverses the market. There's a picture of your strong triggers and a picture of your weak triggers. There's your termination. There's the potential to break, and there it is, broken. And guys, there's your window of opportunities going both direction. There's no reason to not commit these looks to memory. Just go start taking pictures. And then finally, a trend trade checklist. Print out the second sheet. Put it on your desktop. Police yourself. Write these rules on your chart every time you take a trade, whether they're met or not. And eventually, you'll be able to line up what it means to have odds favorable triggers with the correct look and terminations. And notice that area inside of favorable large triggers, all caps, bolded out, highlight. That's your best of the best, guys. I'm going to give you that. And then I'm also going to give you this one, the KISS plan. This is my favorite thing ever. I tell you guys every day, I'm going to give you everything you need to be successful. That's my promise to you. And I'm going to give you feedback on everything that you do to make sure that you're reading your indicators correctly. That's my promise to you. The only thing that I can't do is make you study. The only thing I can't do is get you posting in the room. The only thing I can't do is forcing you to keep it simple in the beginning. But this KISS plan is a stepping stone in your learning journey, and it's designed to optimize your chances of success with the high probability trend trade as a brand new user. And then it's going to be through simulation, study, class feedback, continuous practice. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you're a chart reader, you're going to see a lot of opportunity. Once you're a chart reader, you're also going to form a lot of opinions. So you're practicing right now to follow rules. You're practicing to speak to yourself in terms of advantages. And you're doing it through a trade that's been proven to win up to 70 to 80% of the time. That creates confidence through the memory of success. That teaches you to read your indicators so that you can create that new plan. So your simple plan for consistency. Don't fight the large chart. Never fight the large chart. Large chart is a large crowd, guys. Counter trend feels exciting because if you're right, you're a rock star. But you're going to be wrong more than you're right. And that's not the basis for a trading plan. Trading into areas. They will break every now and then. But they're more likely to hold. Which is why rule number 2 is in place. So don't fight the large chart, guys. Go with the flow. And then define your entry. And have you noticed that everything that we've talked about in the last 45 minutes has been nothing but entries? We haven't talked about how to manage. We haven't talked about exceptions to the rules or patterns outside, guys. All we focused on is putting you in a position, where's my mouse, to get into the market where the market is most likely to continue. Because once you can do that, great entries create manageable trades, guys. And then management should be just as mechanical in the beginning as your entries, because management is where you guys really tend to panic. Nobody ever has a problem just jumping into the market. It's when there's something to lose that people start to get fearful. So the same way your entry has been proven to win more than it loses, your management plan should be mechanical. It should be opinionless. It should be emotionless. And it should revolve around getting you paid as a brand new user, because really that's the goal. So I'm going to click on each of these real quick, because before I get into management, what I really want to do is I want to go through the process one more time of entries, guys. Rules are met on the large chart. That's the key. Odds favorable momentum and a clear path. This is your look. And guys, this is in the spreadsheet that I gave you. This says look for the reversal bar. And when the reversal bar prints to signal a pullback, the next thing that I have to do is locate my trigger lines. And the best case scenario is they're one on top of the other. And guys, look at the size of this box from the lowest line to the upper line. That's a big area. And you're thinking, holy crap, that's a lot of risk, Mark. That doesn't feel precise at all. But once you define your trigger lines, You're going to look for those areas inside of trigger lines. You're going to create your window of opportunity from the lowest point of resistance to the highest point of resistance. And suddenly, that range is considerably smaller. Your risk is dramatically decreased, guys. Resistance can be Fibonacci, magenta, mid-bands, yellow 1-to-1s. Your windows from the closest resistance to the furthest resistance. Anything outside of triggers is not in the window. Once you have your window of opportunity, well, then you just have to activate a limit order right below the lowest point of resistance. And this is where you start to pray if that's your thing, guys. You've done all you can do. Now you're just hoping that the small crowd has it in them to smack into your entry. And if they do, if the small crowd can get you there, you're in a high probability trend trade. You're in a high probability trend trade with the advantage of momentum, with a clear path, having waited for the reversal bar, identified the triggers, picked your line, entered, and your initial stop will go 4 to 5 ticks outside of those trigger lines, guys. And there's nothing to do. You're either going to get stopped out or that market is going to continue down. And if it continues down, how's this for a clever transition? Oh, open up. If it gives you that reversal bar in the direction of the trade, if TechSmith lets me see that picture, give me 1 second. My links just stopped working for some reason. There we go. And I don't know why they're not loading. So we'll go to plan B. Once you're in, guys, your initial stop is 4 to 5 ticks beyond that window. Your first stop movement will be 2 ticks above or below the reversal bar in the direction of the trade. There's pictures of it for you in there. Your first contract goal will be 100. When it's hit, you go to break even. Absolutely nothing to lose. The second contract will be removed at $200 profit. So once you get a reversal bar, there's your new stop. Absolutely nothing to do. You either hit your first target or you're stopped out. If you hit your first target, it's $100 in the bank. Guys, getting paid is the goal for new users. You have to know that you can make money with this software. Stop goes to break even. Absolutely no risk on the trade. And then finally, with no risk on the trade, it's either going to hit your $200 target or it's not. Guys, this is the most mechanical approach to management that I know how to give you. And it focuses really just around getting you paid. I want you to see something though. Do you see these tails, these little fluctuations? If you start moving stops for absolutely no reason, it's almost like they have cameras on you. So don't let fear drive your stop placement. Don't let fear drive your management. Keep it very, very mechanical in the beginning. Keep it very, very focused in the beginning. Make sure that the advantages are present and just follow this very basic plan. And I've had people follow this plan and get to the point to where they're funded on these prop firms in the first 30 days. Your high probability trend trade will take you to your first medium probability trade. And a medium probability trade is defined when most of the indicators line up for the trade. However, a small issue exists. Your small issue is going to be that the area is not broken, that it has the potential to break but hasn't broken yet. We call it a 50-50 trade. So it's got to come from that strong top or bottom, that termination that reverses the market. You have to have odds favorable momentum on both charts. And guys, here we go. No divergence on the 5-1. No loss of momentum on the 5-1 because this is the #1 killer of 50-50 trades. And then your management's a little different. It reminds you that you can't have divergence. It tells you to get out at the first trouble spot. It says get to break even, and it says get paid. So that KISS plan is designed to optimize your chances of success. There's a 50-50. with divergence, and look how it fails. There's odds favorable and a clear path. And right here at 56.20, oh, it just misses the midband. And off it goes. So are there any questions about the high probability trend trade, guys? Once again, I'm going to give you my spreadsheet. You have every picture that I've ever put into it, and you're good to go. I'm going to give you as well, I have PDF versions. I'm going to give you the chart reading 101. I'm going to give you the high probability trend trade checklists. I'm going to give you the PowerPoint in PDF form that I use to teach. I'm giving you also a little something for you new users that think every trade has to be a home run. I'm giving you a daily goal sheet, and it's in PDF form. You've got to define your daily goals, guys, and what you want to make. And there's a lot of people that believe that you have to make all the money every trade, but it's just simply not true. Make a couple hundred, get out, wait for the next trade. You're going to be that good. You're going to be good enough to do that. And eventually you'll know when to hold for bigger moves. But guys, $300 a day, one high probability trend trade to completion is 75 grand a year. And 500, which I think is very, very doable, is 126. And then guys, Nexgen built a copier. It's going to be available on the browser. It's going to be available to you guys. And you can take this $100 a day and eventually spread it out over 10 different accounts. And that same $100 suddenly results in $1,000 a day by using a copier. Not taking more trades, not taking different trades, but rather focusing on getting paid and then just compounding and multiplying, guys. It doesn't take a lot of money to make a lot of money. And then finally, I'm giving you one more thing, and then we'll take a break because I think breaks are important. I'm going to give you the exit conditions. Someone asked me for tidbits yesterday. So the exit conditions, can't stress this enough. Two things you need to know before you sit down with your live money. Why you will enter a trade. What's it going to take to get me in? What are my rules? Have they been proven? Do they provide a statistical advantage? Are they repeatable? And then why will I exit? And guys, exiting is where you're going to have to do some research and begin to recognize some patterns. So in the beginning, why you're going to exit is probably going to be the KISS plan. And that's cool. But you've got to commit to having the rules met. The rules have been proven to win more than they lose. It's like loaded dice, as Ron says. And the more consistent in action you can become, the more consistent in profits you'll likely become. Your process is going to yield results, guys. Not your desires, but the process will yield results. Your great golf swing is going to have you score low, right? Your awesome backhand is going to have you a bad mofo on the tennis court. Your ability to dribble, to pass, to shoot is going to have you actually in soccer or basketball. It's the mechanics that get you where you want to be, guys. And the rules help eliminate emotion. They help get rid of that fear, that greed, that anxiety that new traders typically feel, because really you know that it wins more than it loses and you're just going to commit to take it. So if I'm in a high probability trend trade, I have to know what it takes to get me out. The bold is your initial plan. These are ideas that you'll add as you become a chart reader and you can see things in the moment. But every management plan is unique to the trade that you're taking, which is why simplicity yields results in the beginning, guys. Why simplicity makes it easiest on you. So let's go through what we just see in the S&P. The small triggers have returned to the large triggers, and they are inside of the large triggers, guys. Do we have strong or weak triggers? What do you think? Weak. Great. Smalls and large are above resistance. All of my trigger lines have made it above the fib. We haven't reached the next area. Is the path clear? These are questions that you're going to want to be able to answer. Absolutely it is. So let's start annotating, and I want to show you how important language becomes. We have weak triggers, not odds favorable momentum, rule 1 not met. We have a clear path, rule 2 met. And guys, there's going to be a time where you're going to say, I feel good about the clear path, and I'll let the small chart be my tiebreaker. So I want you to see this. Reversal bar prints. Oh, thank you, guys. High impact news in 2 minutes. Here's my triggers. And there's no areas inside of favorable large triggers. Rule 3 says area inside of triggers. Remember when I said that if your areas get to the wrong side of triggers, you just don't know? You don't know which one's going to create a bounce. Is it going to be that or this? Or are they going to go to the mid band, or are they just going to drop it down? The reality is, I have absolutely no idea. So we gave up 2 out of 3 advantages there. Do you guys see how that happened? We gave up momentum and we sacrificed an area inside of favorable large triggers. Ollie, you told me 6 ticks below the midband. You would have been stopped out, right? Maybe that confirmation pays dividends. I thought of you when I saw that. And guys, we're about to have high impact news in 1 minute. Let's see if they create a reaction that might have been untradeable. I'll tighten it up a little bit. Did you see it, Ollie? You just don't know, but a little confirmation goes a long way. I was thinking of you when I saw that. So here comes news. We'll see if it spikes. It may. There we go. That's a pretty good bounce. 3 divergences in the same price range. Weak triggers. No areas inside of triggers. All right. That wasn't the most overwhelming news. So now we're just in a holding pattern. We're waiting. We're waiting for advantages. So I'm going to go take a break, guys. I'm going to take 5 minutes. Do the same. Stretch your legs. And then when I come back, we're going to start looking at the charts that you guys have posted. We're going to go through them in regards of momentum, clear path, and entry area. And that's it. I'm not going to judge you on your trades, guys. If you made mistakes, we're going to high five because that's how you're going to learn. But we're going to focus on the chart reads and see if there's a way to read it better than we have. And as we go back and forth and look at the live market, if we happen to see rules met, whoops. Whoa, where's my other one? That's my untitled workspace. Sorry, guys. If we happen to see rules met on a chart, well, then we'll play with the simulator a little bit, and we'll see if we can come up with something. So I'm going to take 5 minutes, do the same. I'll be back in just a few, guys. If you have pictures, post them. If you have questions, please post them. See you in a second. So we're just going to start looking at pictures. Pulled a couple up, and we're going to go back to momentum, clear path, and entry. And that's going to be the goal, guys, every time. So Gino got us going. This is from yesterday, and I'm going to tell you guys, you can post your charts in the afternoon. I'll try to come back to them. If I ever miss them, just repost them. So Gino says weakish top. And Gino, are you with me in here? I disagree. You have Fibonacci resistance. Not one trigger is capable of breaking through, and it reverses the market. You have, by definition, a strong top. 100%. And a strong top, when it creates odds favorable momentum, means these areas are more likely to break. You get in at the lowest point of resistance, and then you get in at the second point of resistance. I like the add-on. And I love the hold, dude. You carry it down, and you almost make it to the area. You just jump out for no reason. But you got a lot closer than you usually do. Strong for gold. It's either strong or it's not. It doesn't even matter. Doesn't even matter what market it is. The patterns are the same. The rules are the same. So great start, awesome momentum, potential to break, but the triggers didn't get through it. There's your resistance, right? There's resistance. One line, second line. Small triggers never even broke it, Gino. Same way the large triggers never got through down here. So you're good. 100%. Takes both lines of the trigger lines to get through. Does that make sense? So you've got a strong top, best momentum ever, awesome entry. Do you see how the triggers are split? Maybe a little bit, not too bad. You get in at the lowest, which I think is awesome. You don't trip. Yeah, both lines. There we go. And then I love the add-on, dude. I think that's when you trust the system. And then down it goes. Beautiful trade, Gino. What a great trade. Trading with momentum. Trading with direction. Solid. All right. Joel. 50-50, one area not broken. I like it. Odds favorable momentum on the 13-2. Not so much. The smalls have returned to the large. Because God is choppy. I was with you. Yeah, Gino, I don't disagree with you on gold at all. And the idea is to get paid, right? And if you're trading a market that you know has a temperament, why not definitely get paid? I don't disagree with your exit at all, Gino, especially on gold. I personally have a love-hate relationship with gold, and I tend to not trade it. So we have a 50-50, and we have that 50-50 with weak triggers, and we know that it takes strong triggers typically to break. And it's not a good top or bottom. And then smalls outside of the large, they most certainly are here, Joel. Smalls are outside of the large. Divergence prints. If you took the first entry, the second divergence says, dude, probably not going to happen, right? So, Joel, you had about half your rules met. About half your rules met. The first entry is the easiest entry, and then it just keeps changing and it just keeps getting worse. So, guys, this is one of the things that you'll notice a lot, is that you will see the first opportunity, and in the beginning, you'll be going through all these equations in your head. Is it this? Is it that? Does it fit the rules? I'm not sure. Have a checklist in front of you. And once you see these in the moment, guys, typically your first entry on a not perfect trade is going to be the one that has the highest chance of success. Once it dances, especially when you start getting these divergences, the likelihood goes down. And I don't know if you took the trade or not, but I don't know why you're calling yourself a dummy, Joel. I'm going to tell you guys right now, refrain from beating yourself up like that, verbally, mentally, whatever. Pretend like every time you look at your charts, you have to describe them to a 4-year-old. Because if you start calling yourself stupid or a dummy or I suck or this is bullshit, guys, you're going to believe it, right? It's just trading. Trading has nothing to do with you as a person. You're learning a new skill. Give yourself a little bit of grace as you go through that skill. And then Joel, HVA trade checklist. And man, it's not an HVA trade. Right? Is it coming from a good top or bottom? No. Termination conditions are not true. Well, you're trading into one completely that just held with divergence. Odds favorable, trigger momentum phase. No, the smalls are up. Everything is up. Entry at an HVA? No. So Joel, I think this one you were looking for a short, right? An HVA would be a long, but you can't fight those strong triggers. And you asked, it'd be great to hear Mark's observations. So I'm gonna I took a picture of my observations. Let me know what you think. So you said odds favorable momentum 8-3 headed down. I see large triggers up in an uptrend. I can't have odds favorable momentum. And you say trade here, you point over here to odds favorable momentum, but this is where your trade is over here. After support just held with divergence, every chart says up, every chart has smalls on the wrong side of the large, and you're trading back directly into a termination condition. That's my read, Joel. It doesn't fit an HVA. But that's okay. Let's change gears, right? It wasn't a good bottom. The triggers got through. The large triggers never rolled. It came all the way up to that 1-to-1, right at resistance. You do get to the correct side of your 8-3s. Joel, if you were going to take a shot at continuation down, you did it from the best spot. And what I want you to know is that this is about a low probability trade as you can take. Especially when you get divergence from a fib from way outside of the outer bands on that range chart. You took the best shot at a pretty low probability trade. So I think that your head saw more than your fingers could suggest. And I think that happens. Sometimes we begin to see these patterns, but we don't really have rules for them. And then Joel, this is trading what you see rather than really trading a plan. And guys, this is why I believe annotation is really important, right? Because if you know what you're getting into, you at least know whether or not you need to manage aggressively. So Joel, I don't hate the trade. I just got to get you on your annotation a little bit. And then 50-50, strong bottom, odds favorable, almost a clear path, great entries, create manageable trades. And then Joel, this is one of those times, man, when I've got a strong bottom, I might be willing to forego one divergence because of such an impact being made down here. One of the things you'll find on the NASDAQ, though, is that if these small triggers are down, they're going to act as resistance. And if they're less than a full bar away, they're very likely to do exactly what they did here and just continue back down. So awesome entry, great placement, and then getting out and getting paid on a medium probability scenario. Nicely done. And guys, your trades don't have to fit the KISS plan to be good trades. Your trades don't have to be what I would trade to be good trades. The only thing that I ever hope for you guys is that you're reading your indicators correctly, so you know when there's trouble, so you know you have to manage aggressively, so you know that it could potentially not be a home run, and you get paid and you get to break even. And Joel, you did a really nice job of that on all of your trades. You recognize challenges and you manage around them, and I think that that's brilliant. Andy says, is this a strong top? And guys, we had that little conversation this morning. When the triggers can't break, and this one was close, Andy, but not quite, on that fib and it rolls, it is without a doubt a strong top. And then when you have a strong top, it makes this area more likely to break. And my brother and I were talking about this all morning. This exact look, this exact scenario, and how this fib was more likely to break because of the conditions that we saw here. Great look, great trade all day long. No divergence, strong triggers from a good top. Smalls breaking through. It's a good look, Andy, and absolutely it is a strong top. And then for you guys that are working on strong tops, if you're trying to throw that language into your daily routine, here's one that's strong tops for the new user. And it talks about termination conditions, and then it talks about no triggers through and what it takes to turn that termination condition into a strong top. And I write these little blog things just for the grins. So I just dropped it in the room for you. And on that same token, guys, if there's a subject you'd like me to write a quick little snippet on, just ask me. Seems like you're hitting stops more than you're taking profits. So, Rob, I'm going to get you on this one. Not one mention of your rules, right? Not one mention. Was there momentum? There was. Was there a clear path? There wasn't. Was there an area inside of triggers? Absolutely. Why are you risking $400 on a medium probability trade? That's the question that I would ask. From your entry, you could have lost $80, $75, $100 and just waited for the next best trade. You don't have a good bottom. It's a hope trade. And got this stop. So let's do this one. Are you with me, Rob? If not, here's your lesson for everybody else via Rob's picture. One of the things on stop placement, we can use the small chart to know where the market shouldn't go. 4 to 5 ticks below. This is the way I teach stops every day. That's it. If it gets below here, I don't want it. Does that make sense, everybody? If it gets below those triggers, 4 or 5 ticks, hell, I don't want to be in it. I've lost my edge. So check this out. Is that a good look for a long trade? Right there. Smalls railing through, trend changes, everything down. Would anybody take a long with that look on their chart? I wouldn't. What about here? Or here? Or here? Or here? Probably not. And guys, you're not going to put this together in the moment. And I'm not beating up Rob for it. But what happens is you take this entry, and Rob, your entry was solid, dude. But this right here is going to absolute crush the average trader. There's just no reason to put 8 points of risk on a medium probability trade, guys. We're better than that. You're better than that. You knew exactly where the market was most likely to continue, which means you know exactly where the market shouldn't go. And you spent so much time hoping that this shit would work out that you missed the pullback to the mid band inside of triggers with odds favorable momentum. You held through a trend trade short. So guys, you've got to do this. You've got to practice. You've got to post these in the room, and let's talk about them. Because there's not one person in this room that hasn't done this in some form or fashion. There's not one person in the room that hasn't just hoped to hell that that trade would go. As I refine my entries around termination conditions, which is more important? 13,251. So, Rob, you're not answering. Large chart leads the way, brother. Large chart leads the way. Large chart defines momentum. Large chart defines areas. There is one termination condition on the small chart, Rob, and it's 3 divergences. 3 divergences. You have a 50-50 on the large chart, potential to break. But you don't have any synthetic fibs on your large chart right now, Rob, which means that you're robbing yourself of knowledge. You're robbing yourself of a real clear picture. Your large chart should have a fib right here. Get with Jason. Have him put your synthetics on. But the large chart leads the way. The large chart defines direction. The large chart defines momentum. The large chart defines areas. The only time on a small chart where I'll say that the termination condition is true, and let me just go to it because I think repetition is key, guys. I really do. I have to hear things 1,000 times before they finally sink in. I just assume that the world is like me. That's the only one. The only time on a small chart, Rob, I'll accept it as a termination condition. Because what happens is on your large chart, and let me show you something cool. I took this picture a long time ago. Because they're different bar structures, because they're different time frames, your large chart can show a 50-50, right? The potential to break because of all that momentum, but your small chart might look totally like a termination condition. So let the large chart lead the way. Let the large chart define your areas. And what will happen is you'll have a better shot at making sure that you're not trading into an area likely to stop the market. And then again, know the difference between the potential to break and actually broken. And that'll pay dividends for you as well. Good stuff. So 50-50. I guess not, Andy. So small triggers below, large triggers above. Rob, can you give me a why if you recognize that this is the potential to break, but not broken yet? Okay, cool. And then you've defined your area, and you're looking for the lowest, and it's moving below a little bit, but you're picking it off there. And then we don't know what happened. There is no sell stop. You got your limit order. What happened? What happened in the trade at 625? Let's go look. Market's been moving. Just didn't give you a pullback. No, I don't think it did. Are you Central or Eastern on your charts? Because there's your 33 fib. Yeah, it didn't go up at all. It just never gave you a pullback. It just railed to the bottom. But your thinking, Rob, was great. Your thinking was sound on that one for sure. Odds favorable, potential to break, not directly into the fib, and looking for the pullback. Everything that you did here was exactly like you should have done it. They just didn't give you your entry. So here we go again. Potential to break. And then once again, Rob, I really think that synthetics on your chart would pay some pretty big dividends for you. because there was a giant fib right here that was acting as a termination condition, which means that you shouldn't have been taking this long, which means that you shouldn't have had your stop way down here. So try this for me, Rob. Are you in front of your computer? Right click and go to data series and make sure that tick replay is put on. That's what gets you your synthetics. Because your synthetics, then you probably need to rebuild your workspaces or get with Jason and tell him, hey, I don't have synthetics. I need a little help here. Because one of the things that helps us so much, Rob, is your large chart should have areas from the 5-1, from the 21, and from the 13. And they're all equally as important. So if you're not putting those synthetic fibs on your large chart, you're robbing yourself of some really valuable information. And I'll show you exactly what I mean through your pictures. There was a fib right here, but you don't see it over here, which told you, hell yeah, let's go long all day long, right? So you didn't see anything, and that's a pretty good look. 21.3, it's just from an even higher time frame. So you literally have fib levels from 3 different time frames on your large chart, and each one of them has the potential to stop the market, which is why they're there, because it creates the highest advantage for you guys. And Jason could get you set up in a second, but one of the biggest reasons this just probably didn't work out is there was a giant red fib right here. You traded directly into a termination condition, and it did exactly what we would expect. Where did it go? A termination condition to do. Pushed it right back down. So get with Jason if you need help on that, for sure. So that is price reached. Where are the triggers? Below, no trade. Perfect, Rob. Perfect, perfect. And then the same is true here. Price reached support. Where are the triggers? They're above, no trade. And the same is true right here. Price reached that divergence line. Where are the triggers? They're below, no trade. So you've got the recipe down perfect. You really do. You've got it solid. And see how this chart, it has your synthetic fibs on there. There's so much more information, and I'm not sure where they went overnight. I know this is from yesterday. But that's a 5-1 fib that stopped the market cold. And that was a 5-1 fib that stopped it. So I think that your reading is great, right? Then why stopped it so much? What do you mean? Why does it stop it so much? Why are you stopped out so much? Because you're trading into areas. That seems to be your biggest challenge right now. And not only are you trading into areas, you're also putting a ridiculous amount of hope on those trades. Here you didn't have the information that you needed. The KISS plan says don't do it from a bad bottom. The very basic management plan says don't risk $400. You could yesterday. I don't know what happened this morning. But you're getting stopped out isn't only because you're missing fibs, Rob. You're getting stopped out is because you're not following an exit strategy. But yeah, missing fibs is part of it. That's one of the reasons we post in the room, right? I noticed these things, but you had them yesterday. So I don't know what changed between yesterday and today. Right on. Let them fix you up, man. But your understanding, Rob, and I'm telling you guys, I'm going to keep going back to celebrating victories. Your understanding is good. You know the rules, and now you're working on following the rules. And I think this morning you were just missing a little bit of information that could have been helpful. So I don't know if something is corrupted. I think you are. Now we just got to get you thinking. I need you to look at this chart, Rob. And I need you to say out loud in front of your computer, what the F was I thinking putting my stop here? I need you to acknowledge the fact that that is so ridiculous to have a stop there that you almost, what do you mean why? Why is it ridiculous? Okay. This is your trade right here. That's your entry. I'll get on board with your entry all day long. Rob, do you have rules met for a long right here? Give me a Y or an N. You have rules for a long on the wrong side of the triggers with the small against, with every trigger line below resistance. And no areas inside of favorable large triggers. You have rules for a long there. Then you need to refine your rules. You don't have rules met here for a long, not here for a long, not here for a long, not here for a long. Your long was right here, Rob. That was your only shot at continuation up. If you take this long, once it gets here, dude, you're on the wrong side of everything. You're on the wrong side of triggers. You're on the wrong side of fibs. You're on the wrong side of everything on God's green earth. All the way down until it hit your stop. By here, you're fighting odds favorable momentum against you. I know, but this is the next thing, right? So Rob, in the beginning, as you work on things, as you sort out your management plan, I'm not going to tell you how to trade. That is not my business. But I would encourage you to read over the KISS plan and make sure that you understand what it means to put your stop 5 ticks beyond where the market is likely to continue. Because that is going to save you thousands of dollars compared to giving up $800 on a trade that's been failed for the last 8 minutes. Does that make sense? Keep it simple in the beginning. Don't harness onto hope. You're better than that, Rob. You know where the market is likely to continue. You know what momentum looks like, and you know the recipe for areas. Either that or you're not putting it where it belongs. It's one or the other. You're in a red haze of emotion. So I would say, just based on this chart, your biggest opportunity is to understand stop placement and be okay with it getting hit every now and then. Hopium. The hopium dens of Nexgen. Because your momentum was kick-ass, dude. And your potential to break was definitely there. And your entry was right at an area inside of those triggers. I'm telling you, dude, it was like 80% of the way there. And then you take that small hickey and you're like, F it. I'll wait for the next one. Having that fib there would have paid huge dividends. So, Rob, if you ever look at your small chart and see a fib and it's not over here, something needs fixing. And sometimes, Rob, you can try this before you go to Jason. Right-click on your chart and just reload all historical data and see if that brings it back. Sometimes it will. I don't hate, not even a little bit. Who's going to show me that one? Somebody, Pete did. Dollars to donuts. Pete said, hey, Mark, check this mofo out. I'm making money. Oh, no, it's not. Man, Pete, now I got to come back and put you in order. So, Rob, let's celebrate. You do know the reads, and you do know the rules. And now we're just going to work on being consistent with them and controlling risk a little bit. Thank you for posting, man. Those are good posts. Paul Flowers. Paul says, momentum, 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 in, out, paid. How do you go wrong with that, Paul? Beautiful trade. Beautiful trade. You're focused on an oil trade. That's okay, Pete. You're forgiven. I know if you were looking at it, you would have been in. Mr. Flowers, outstanding. Momentum, clear path. Clear the fib. Trade to the fib. It's hard to go wrong with that plan. Erla, uh-oh. Erla. How am I not signed in? If I get a virus on my computer early, you're in trouble. And it's not there. Erla, could you repost for me? I'm not sure what happened with yours. Everyone else is going right through. Yours appears to have challenges, and I'm not sure why. Ron says, time for a chili dog. What does that mean? That means Ron has odds favorable momentum, a clear path. He jumps in, he jumps out. Beautiful trade. Beautiful trade, Ron. All right, Andy, 952. Entered here at the fib, taking the momentum shot and riding the momentum up. That's all it is. So, Andy, not so much a trend trade here, right? You didn't pull back to areas inside of triggers. What you did is you took a momentum style entry. You said, I've got odds favorable momentum, both charts. And you're anticipating the breakout of the fib, and you got it beautifully. And you're doing it right here. And look at the momentum. Strong triggers break things. And then you get one out at trouble, and you just let the other one run. Nice trade, Andy. That's a momentum style trade, guys. Anticipating the breakout of the fib. This was an observation during Asia yesterday evening. Not the same volume. So in the S&P, not a strong top. Small trigger stayed above large on the 13.2, even though we had a divergence. Prior pivot was in the middle of nowhere. So just weakened triggers in the middle of nowhere. And then it goes straight to support. It comes back up. Everything rolls. And it's a 50-50. Small triggers remain below large at divergence, but since we had a weak top on the 13.2, market kept going up. So Kurt, couple different things. 50-50 trade, right? Do you recognize it? You're putting a lot of air out of your lungs for this trade. This, who cares? This, who cares? This right here, this pivot from nowhere, that's the one that's paying dividends on this one. You could literally just stop your chart right there and ignore everything behind it. So you've got odds favorable. It's awesome. You've got the potential to break. That's beautiful. And then 1, 2, 3 divergences. So 2 divergences on a 50-50 is pretty much the kiss of death, Kurt. And that's exactly what happened. Off it goes. Isn't that so much easier? 50-50, shit, rules say 2 divergences, don't do it. I think that's so much easier. But I'm not nearly as smart as you. So for me, I just go back to the very basic rules. Bad top, 50-50 divergences, to hell with it. I don't want it. It's a great chart read. It really is. Nicely done, Kurt. Whatever gets you to avoiding that trade, right? And you avoided it. And then Erla, your links are just killing me. And I'm not sure what's going on with them. Let me close everything and try again. Come on, screencast. There we go. Here it comes. Awesome. Erla, beautiful. Guys, look at this. Everything says up. The momentum is crazy strong. Erla lets it get past trouble, rides it up, and then with a loss of momentum exits. Erla, this is absolutely gorgeous. Money in your pocket because you stayed out. Amen, Kurt. Beautiful trade, Erla. Momentum. Gosh, momentum for the win. Is it? Pete calls it Big Mo. Get that Big Mo, guys. Beautiful, beautiful. All right, let's see what you did, Pete. Everything says down. Strong triggers. 22, 22. And you take the entry coming down. Doesn't quite work out. You try it again. And eventually it goes. Right on. That's a tough one when they dance. And guys, that's exactly what the small chart's doing. The small chart's just dancing. And when it doesn't agree, you can get caught in this little fluctuation, right? And then that second lower divergence is pretty powerful, Pete. Has it? And then there's that little snapback to the mid band right at the small triggers. Have you seen that entry? Do you know that entry? When it's not perfect, let it all agree in that little snapback. And it's about the same price. Just letting them finish the dance. It's great recovery. And yeah, they just blew right through. Didn't even pause for you. Nice trading, Pete. And then Kurt. Odds favorable. Clear path. Nice entry. Reasonable stop. Were you 4 to 5 ticks below? 35. 34 represents 4 ticks. So Kurt, were you like 2 ticks off of the triggers? Yeah. I don't know if you've ever heard me say it. 4 to 5 ticks, man. You got to give it some breathing room. And you're saying that a little bit of breathing room would have kept you in that trade and produced a winner? That's a good lesson. It's a lesson nobody likes to learn, but you got to be willing to lose, guys. You've got to be willing to keep a little risk on a trade. Sun Tzu said that you've got to put yourself in the kill zone to be successful in battle. Trading is very, very much like that. And then Kurt, when it stopped you out and gave a reversal bar, that's not a bad time to re-enter when it looks like this on the large chart. That's one of those times where a little confirmation is a totally reasonable entry. Here's the same one. Odds favorable, potential to break, perfect entry, smart stop, money, money. You got to go in there with them, Gary. So, Joel, can I ask you a question? Does this look like a chart that a dummy would post? All right, I can't do anything for you, Joel. You know that it's not. You know it's a good trade, and you still want to kick the shit out of yourself. You're going to have to work through those demons. All right, Andy, 50-50, strong bottom, no divergence. Had to take this one twice because you're stunned. Why did you have to take it twice? Why were you break even while it's still going down? Andy? Did it hit your first target? I see 2N. Did it really? I just can't see it. I believe you. Oh, there it is. Your target's 4 ticks? Okay. So one thing, Andy, is if your target is that close, break even doesn't make any sense at all. Because you haven't even left the launch pad yet. You're still in the window of opportunity. And then Kurt, do you see how he re-enters on the reversal bar? That's one of those ones that works out for you when the large chart looks like this. It's a good lesson. Andy, that's almost too tight. I mean, you do what you want to do for sure, but you might as well just take both at 4 ticks and go on with life. Because that's going to get hit almost every time. All right, C-dub. Everything says up. It pulls right back to support. Waited for bar to change color in case it was going to the mid-band. All right, make up your own rules. I dig it. Nice trade, C-dub. Stop would have kept you safe if it did. Just saying. Right on, Kurt. I'm a big fan of wiggle room. It's hard to trust it. And to be honest with you, Kurt, is you have to trust this look before you're comfortable putting risk on a trade. Once you really trust the trend trade, once you've seen it enough to believe in it, then it makes sense. And we'll see if Cindy did it, but Cindy's notorious for brilliant stops. So Cindy, don't let me down on that picture. And then Paul, odds favorable, clear path, perfect entry, easiest money you'll make all day, right? How are you doing, man? It's nice to see you in here. Does everybody see it? Odds favorable, clear path. Guys, that's the one. Perfect entry. Easiest money he'll make all day. I love it. What a great trade. All right, Miss Cindy. Oh my gosh, it must not be good because it's not loading up. What did you do? I don't know what's going on with screencast today. Here we go. All right. So check this out. Strong bottom. Termination, no triggers through, reverses the market. Odds favorable momentum. Absolutely beautiful. Cindy, great entry, but you are right into that fib, right? 50-50. This fib represents a beautiful place to get paid. And then when that second divergence prints on a 50-50, Cindy, you've got to, well, you don't hate them that much. It almost seems like you're attracted to them. But check this out. So I love this. First and foremost, I think your large chart is perfect. Perfect for taking the trade that you took. And here's what you've just got to, yeah. So on the KISS plan, when there is trouble in the way, part of my position comes off at trouble. I can't spell today, which means that this is an awesome place. You're in 4 contracts, right? Take 2 off. Get paid. Get to break even. And then the other thing is I know this is 50-50. I know 2 divergence is more likely to push it lower. Protect myself. So Cindy, you don't ever get to say that it's too fast again, because you know it's too fast for you to make decisions, but you still trade it. So that one's off the table. You don't ever get to type it happened too fast in the room again. because you know it's too fast for you more often than not. And then beautiful, once the two divergences are done, instead of trading into the area, you trade from the area, and it's easy money, right? Here it's easy money because you cleared trouble. I love your first entry, but you got to respect trouble a little bit, especially on the NASDAQ. The NASDAQ, you know it, they're a pain in the ass. What time was the trade? Was that this morning? Was it after news right now? Right on. I mean, everything's beautiful. I just think that second divergence is your management opportunity. The second divergence is without a doubt your management opportunity. And then your re-entry is so beautiful. And I don't think that the NASDAQ is too fast for you because I've watched you trade. I think sometimes you hold on a little more and you ignore some warning signs, which is okay. You'll work through that. I'll nag you to death. I'll nag you to death until you stop. We had 3 divergences in the same price range. I'm going to take a quick run. My dog is telling me that she needs to go outside, so I'm going to take 2 or 3 minutes and then we'll come back and we'll finish strong. Do me a favor, guys. Post them in the room. Ask some questions. Keep me busy for the last hour. I'll be back in 2 or 3 minutes. All right, guys, I'm back. Kurt, there is not a KISS plan for momentum trades. The only reference Nexgen makes to momentum trades is straight from the trading guide. Oh, Kurt, I'm going to give you homework. You ready? So here's the rules for the momentum trade. And let me find it real quick. So I'm going to give you this. I'm dropping it in the room right now. Guys, this is all the KISS plan is. You have an older trade with your rules on it if you want it. Yeah, send it over to me. So, Kurt, this is a template. And it's designed to help you create your plan outside of the simple plan. The KISS plan is the simple plan. That's the one that I put together for you guys. So every time I add a new trade, a new look, a new scenario, I need to make sure that it's repeatable and testable. Guys, my results should produce a trade that has been proven to win more than it loses, providing me an advantage. And it doesn't happen from 10 trades. It's 20-50. Nexgen's already done the work for you. Nexgen's already given you the rules. Yeah, that's the KISS plan. And that's what Cindy just put in there for you. But the KISS plan that I give in the room every day, it doesn't have a momentum trade on it. Ooh, sorry. Can you guys hear me now? Sorry. That's my bad. So the KISS plan that I give to the room every day, Kurt, it doesn't have a momentum trade on it. Because the KISS plan is the simple plan. That's the whole idea behind KISS, is keep it simple. And a high probability trend trade is easier to catch for new users because the momentum trades rely on termination conditions and using the momentum. No, that's okay. You want a checklist for the momentum trade, right? Cool. So what I did is I just gave you the tools for you to build one. Define your entry. There it is. So strong top or bottom. So you're just going to type in your own. It has to have strong top or bottom. That's the first part. And then what is it? No termination conditions is the second rule on it. And then it has to be pull back to small chart area at strong small triggers. So what we've done, Kurt, oops. What you actually do is you create your own checklist. And this is the easy part, right? I can put this in the room for you. You didn't need me for that. The part that you need to figure out for yourself is what it looks like, right? And start to commit it to memory. And guys, the KISS plan's easy. The KISS plan gets you right where you need to be. Developing a checklist is great, but making sure you know what it looks like. So just build one. And just use this. Like, you don't have to reinvent the wheel. And all the KISS plan does, Kurt, is it takes all of the study that you should be doing as a new user and puts it into one place with pictures to make it easy. But I don't do that for every trade. There has to be a point where you guys start just doing it on your own. I could do it. And Joel may have just given you John Novak's version of it. See, I think this is too much. John and I have a differing opinion on that. I think that's too much thinking for the new user. So, Kurt, if you need help beyond that, let me know, and I'll see what I can do for you. And C-Dub. But just start collecting pictures. We can build it together. It'll be fun. No, Ron, I'm okay. I've got all I need for that. I've still got them. I've got them written down. Oh, for Kurt? It's a different trade, Ron. The momentum trade and the chili dog trade are two totally different trades. I made a chili dog kiss plan. I just don't teach it. But that's exactly what I did. And I guess, Kurt, this is what I did. When I wanted to learn how to trade the way Ron did it, I created the rules. I took pictures. I stole his picture with the rules written on the chart and put it into my KISS plan. And then I had to go back and study and take a bunch of pictures. I even took pictures of what it looks like to not have the rules met, because I'm a firm believer in understanding both directions, both sides of the coin. So, man, yeah, Ron, I turned it into like a whole to-do there. There's another trade that I'm doing that with right now, which is why I'm 90 pictures deep in 2 days. All right, let's see what we have, C-Dub. Odds favorable. Where are we talking about? Right here? Just want to make sure. So odds favorable, absolutely. No clear path, 100%. Seems like first opportunity is okay. But after second divergence, stay out. Is this the KISS rules? No. So C-Dub? Are you in here with me? Did you have the KISS rules in front of you when you were typing that? There you go. That's what I needed you to know. No clear path is not the KISS rules. So I'm going to show you guys something cool that you can do if you want. If you do. Oh, cool. Have fun, Ron. I'm so jealous. I want to go do beachy stuff. Almost. And I almost didn't get herpes, right? Almost is a rough way to trade. It means that my rules aren't met. So one of the things I do, C-Dub, when I'm really trying to commit, print this out, put it on your desktop. You didn't have a clear path, right? So you're looking for momentum in an entry area if you still think about taking the trade. You had one line at triggers, and you're absolutely right. If you're going to trade back into a termination condition, that's your least amount of risk. I'm not saying that it's not a trade, but it doesn't fit the KISS plan, because the KISS plan is the best of the best, and it tells you not to trade into termination conditions. And it pulled right back to an area, and it closed the gap to the large triggers, and it bounced. And then that second divergence bounced right back, and then that third divergence is what pushed it up and launched it to the sky. So it is definitely outside of the KISS plan. But guys, I'm going to tell you right now, there's so many ways to catch a trade. But if you can't do it consistently with the easy one, I wouldn't worry so much about trying to make it harder. Is this technically a 50-50 since the large triggers haven't broken the divergence? Absolutely it is. 100%, Belt. That is a 50-50 look. Has the potential to break. Your great entry was outstanding. Your risk is defined, maybe a little lower than it needs to be. Good stuff. So, Belt, the one thing that the 50-50 says is take the first contract off at trouble, but you're only trading one. This is why I'm a big fan of trading 2 contracts as you're learning. Take one off at trouble, And then see if the other one runs. And you've already got one divergence, so it'll be interesting to see if you get a second divergence. If you do, that's certainly an exit condition. But great entries create manageable trades, right? That was $70 down to trouble. You've got to make the decision if that's enough money for you. Nice look. And then Pete, this was a counter trend trade. Triggers have not rolled. You went short with weak triggers into a divergence low. So short into a termination didn't work, and you said, well, I'll teach them. I'll go long. You got the third divergence after you were already in. And you took it up to there. Pete. I get it though. That's the just in case, right? But you didn't have any momentum or a clear path. And then that's the wait a minute. That's weak triggers at a termination. None of them broke through. I've already had 2 divergences. Me personally, I like to see the third divergence, but I love that confirmation before I start fighting things. But nice recovery, Pete. Nice recovery. So how we doing? Stoic, how are you doing today? Is it a little easier? Things starting to make sense? Are you starting to hear words that make sense? Dunk, same question. It takes a little bit in the beginning. It takes a few days to really start to piece things together, and then it really falls into place quickly for most people. The people that ask the most questions tend to get to where they want to be the fastest. So don't be shy, Dunk. That's weak triggers, but that's a clear path. Then it falls apart back together and falls apart again. For some people, Morgan. Actually, for most people. And do you guys want to know why? Do you guys want to know what that weird phenomenon is and why you should probably just expect it? It's going to be story time since nobody's posting pictures. So one of the things that I do is I give you guys a checklist, right? I give you guys a checklist and I say, this is your best of the best. This is going to set you up so that you can learn to read your indicators. And guys, every one of you starts reading your indicators. And whether you do it on purpose or not, you begin to recognize patterns. You begin to see things. And you're like, oh, I've seen this before and the market went up. And you try to trade that thought rather than trading your rules. And the biggest challenge comes from new users when they abandon their checklist, when they abandon their rules and replace it with their reads. And your reads, guys, are nothing more than an opportunity to know whether or not your rules are met. And let me see. I thought I had something written up on that. So the smarter you get, oddly enough, the smarter you get, the more likely you are to break your rules in the beginning. Because you really will. You'll have your chart read is one thing, but your rules are another. It helps you to post C-dub, and it'll continue to help. Guys, let me show you what it looks like with my brother. So he and I post all morning. This is our Skype, but look at the bottom. Guys, these are all from today. I use the exact same concept that I offer to you guys, where I take my mentor and I show him what I'm doing, and we talk about it, and he shows me what he's doing, and we talk about it. And guys, it's so valuable to have that feedback. And I'm not saying that I'm the smartest guy ever, but I'm pretty good at reading indicators. Which one, Kurt? The one that we're looking at right here? Yeah, I do every day. I'll keep sharing them though. There it is. high probability, and that's the one that also have the pictures of what it means to have them met. So guys, there's this weird thing, and when I used to train managers in a previous life, and that's what I did, they would send me managers from all over the United States to train with me, because one thing that I was really good at is taking hard concepts and making them simple. And I was good at systems and routines. And one of the things that I always did is I gave new managers a checklist, and I said, hey, if you can follow this checklist, and I'm going to show you how, but if you just follow the checklist, you'll never falter. You won't lose money. You won't forget to order stuff. Your staff won't hate you. And everybody that I taught for the first 30 days was an absolute rock star because they were gung-ho. They couldn't wait to be successful, to show me how smart they were. And guys, that's what this is for you. The high probability trend trade checklist. This is your show me how smart you can be, and it makes it easy for you because everything is clearly spelt out. Everything is laid out for you 100%, and all you have to do is follow it. And then right around 30 days, right, Morgan? Right around 30 days, you start seeing things, and you start almost trading your rules, and you start deviating a little bit, and you start steering away from what's brought you success for that first 30 days. Some of you go completely off the rails and you do your own thing for the next year and you struggle. Some of you come back and you show me your broken rules and you try to defend them. Yeah, but I made money on this one. Well, everything that I teach has about 1,000 pictures behind it that prove that it wins more than it loses. And what, Cindy, and what happens, guys, is most of the people that go astray, and I am in the glassest house you've ever seen. My hand is up. When they come back to simplicity and they come back to a very simple plan that's easy to follow, that doesn't stress them out, when they focus on getting paid rather than being right, it tends to pay dividends for people, and it tends to put people in a position where they get back into their winning ways. And that's one of the reasons why in the beginning I tell all of you guys, start learning how to follow your rules. Start insisting that your rules are met in order to take a trade. And even more importantly, know why you will exit, right? And Cindy, if you don't know the reasons to exit the trade that you're in, you find yourself holding longer. You find yourself hoping that it goes back up. And I know, and I'm guilty of every sin that it looks like I'm pinning on you guys. And I've done it too, Cindy, which is why I can speak so authoritatively on it. Because I've done it. Because I've blown out Apex accounts hoping for bigger moves instead of getting paid at lines. Ignoring second divergences instead of exiting trades. And what happens, Cindy, is you've got to have this refocus. Just because I'm talking to you, but I'm talking to everybody right now. You have to have this refocus. And your entries are amazing. Your entries are astounding. But you've got to recommit to why you'll exit. And what you'll find is that it doesn't take long to reset because you already know everything that you're supposed to do. You just have to recommit to doing it. And everybody needs to hear this, Joel. This is as much for me as it is for you, as it is for Cindy, Gino, Morgan, all of us. Because what happens, guys, I promise you, if you spend 30 days with me and you study the way I teach you to study, you're going to be able to read your charts. You're going to be able to find these trades. And the only thing that's going to come between you and success is you. And the ability to do nothing when there's nothing to do is the most valuable tool that you can have. So this was created by, some of you have seen him in the other room, Siva. He's been with us almost 17 years, guys. He's one of the original. And when he was learning, he created this sheet. And I think this is brilliant. Because we all want to be in the market, right? And this tells us that we can't be if we're breaking our rules. And if you miss a good entry, if your rules are met and you talk yourself out of the entry, you've got to stand up and walk away from your desk for a minute. That's it. Set a timer. Have Siri do it. If you enter late because you didn't trust your good entry. That's 2 minutes because you've increased your risk and decreased your profit. If you exit for no reason, Gino, right? You guys that have talked to me, Kenny was working on management. If you exit for no reason, that's 3 minutes because that's costing you money. Moving a stop to lock in profit in the middle of nowhere, not at price action. That's a 4 minute. No, that's 5 minutes. Exiting late and giving up most of the profit, 7 minutes. Trading against direction, 10 minutes. Trading against an area, 15 minutes. Termination conditions, guys. This is 17 years old. Termination conditions have been a drainer of accounts. And then trading against area and direction, you got to kick yourself out of the room for the day and go do something else. But man, I love this because what it did, and I'm telling you, this guy's a brilliant trader. And he trades for 9 months out of the year. Does it guarantee profits or does it rob you from the profits that you should be taking? Does moving your stop arbitrarily, does it cost you $200 in the move or does it guarantee you $25 and not a loser? Which is more important to you? And CDEV, this is why you have to have reasons to exit. This is why you have to have reasons to exit. Because if I'm long right here, where was that long from? 1024. If I'm long right here, CDEV, I'm going to show you what users do in management. Can we agree that that is an outstanding look, everybody? Can we agree that that is an outstanding, super low risk entry, right? And once you get the reversal bar, your stop is right here. At the first divergence high, that's a good spot to take off half profits, right? But that is from 56.35 to 56.40. Your first sign of trouble is 5 points. Does that make sense? Your first sign of trouble is 5 points. Nothing. Absolutely not. And some people will say, well, I'm going to exit at the small triggers because what if, yeah, it would be Josh, because what if the small triggers kill it? Which momentum is more impactful? Odds favorable on the large chart or a little small trigger that couldn't even get into the synthetic triggers, right? Odds favorable. And then you're a clear path by the time you get here. So once you get odds favorable and a clear path, guys, there's just no reason. There is no reason to exit this trade until you hit this fib or until you get a third divergence. And what happens is you have to know why. Why will I exit? Well, once I'm in this trade, I'm either out at 100, 200 KISS plan, or if I'm growing my plan, I need something significant. And this is where here's my stop. There's my new stop. And guys, it might get me on my last contract here. The key is to get paid on the way. But you have to know why. You have to know why you're doing what you're doing. Trading book, first live trade. Strong triggers, yep. High probability, MES, first live trade, first stop loss of profit target due to wick candle was red at divergence. So you got out at the first sign of trouble like we just talked about, trading book. Perfect entry. What to do when I see these wicks in reversal colors, candles in boxes? Right on. Trading book, do you have rules that talk about the color of the candles and the wicks on the small chart? Share them with me if you do. I have rules that say pull back to areas inside of favorable large triggers. And the only way you're going to get that trading book is if you have red candles, right? So let me show you something cool. Watch this. And maybe this will help. Let me go back to the market here, and I'm going to make this really big. And I'm going to get rid of this. And Trading Wick, I want you to see something. Not Trading Wick. What am I talking about? Trading Book. I'm mixing stuff. So there's the 1 bar. Does the momentum ever change on this 1 bar, guys? What do you think? I say no. Never does. This chart never blinks. It's a slow chart. Trading Book. Where did it go? Boom, boom, boom. There's your fluctuation. That is a 1 tick. Look at that. You have to have these red bars to get you to your perfect entry. You have to. But all of this happens inside of this. And this is why we let the large chart lead the way. This is why we insist on the large chart telling us that it's time to take a trade. So once this is open, Trading Book, your entire focus is on that mofo right there. That's it. You have every ounce in your being focused on this area. And you're hoping they hit your limit order. That's it. And anything that happens on the way down, who knows? Who cares, right? You're going to see these little fluctuations. The same way you saw a little fluctuation when everything was going up. Trading Book, I think you should do whatever you want to do. I think you should do whatever makes you happy in life. I absolutely refuse to give you trading advice. I won't do it. I won't tell you what to do with your money. Because if I get a vote, I think you should just send it all to me. I think you should buy me something pretty. But guys, this is why these little fluctuations on the small chart, it's easy to let them fade, like freak you out, right? It really is. One divergence on the small chart. Granted, it's a 50-50. It's so close to not being a 50-50. Small triggers turn against you. You're going to see all of this. If you don't, you're never going to make it back, guys. If you don't see the triggers turn, if you don't see the bars go red, you're never going to make it back to your entry. So learn to love these. Learn to appreciate these. Hope for these. Yeah, great question. Price reaches support. Triggers are above. It is. It's a hell of a pucker, isn't it, Trading Book? Even though you know it was the perfect trade, right? You knew you had a rock star of a trade there. And you still puckered. Do you know why? Because you don't trust it yet. And Trading Book, what's amazing is you'll get to a point where you're like, they got to come get me, right? It either hits my target or they come get me. And those are my only two options. And it's crazy when you get to that point, because I would have never thought that I would ever get to that point when I first started. And then you just get there and you're like, holy crap. Luciano. Odds favorable, clear it, nothing in the way, and straight down to support that stops the market. Can I get like a... Gosh. Why do we get paid at lines? Hold on. I did that wrong. Sounds good, Trading Book. Right into support. And Luciano says, yep, it's time to get paid. And look what the market does. Did you ever think that you would be able to have software where you could literally say to yourself, I know where the market's probably going, and I'm going to take profits right there? Just a jump-in trade, C-Dub. The old JTFI. Momentum for the win. It's just using momentum. In Luciano, it's rad. What a great trade. And guys, this is the difference between the people that are getting paid on the daily. There's just no reason to not get paid at a blue line. Luciano's good enough. He'll find the next trade. He knows he will. He's studied. He knows exactly what he looks for. Makes it easy. All right, gold belt. Belt, you love abuse. High probability, weak top, clear path. Why does it blow past the mid-band? Because the buyers are pushing it. How's that for an answer? Because the buyers are pushing it. That's it. What did it end up doing? Did it blow through everything? Stopped out? So check this out, Belt. Let's turn it into a lesson. And first and foremost, it's a great look. It's a beautiful look. Rules met, awesome, room to target, beautiful. I love everything about it, dude. Beautiful entry. Stop makes sense. Once you get this reversal bar, I'm 2 ticks above it. And it's only $50 difference, right? $40 difference. But at this point, they gave it a try. And gold is just a colossal pain in the butt, Belt. And there's people that trade it successfully, and there's people that won't touch it. Because gold is notorious for blowing through areas. You took the perfect trade. It didn't work. But here's the real thing that I think on this one is a pattern that wins 70 to 80. Whoops. 80%. How many is it going to lose? This is a cost of doing business, Belt. So when I take a trade like this, right, when my rules are met, when my look is perfect, when my entry is solid, when my stop makes sense, you'll get to a point where you're like, they got me, right? So yeah, but here's the deal. You had confirmation. No, you're good. The only thing that you didn't write, on your chart, that's the only thing that you didn't annotate. If you had put that on there, you can just say inside of triggers. Had you put that on there, you would have said, oh my gosh, egads and little fishes, I had every advantage. This is a trade that wins 70-80. So the goal ultimately is I'll police you all day long, Belt, and we'll go over it and we'll go back to those ideas of momentum, clear path, and entry area. And eventually, if all you do is write those rules on the chart, those 3 rules every time, you'll make sure that you're never missing anything. It's an awesome trade, dude, and it just didn't work. Directly into a termination condition without momentum, and it lost. Crazy. You never offend me, Joel. You're just so much better than you give yourself credit for. That's all. That's all I'm saying. Man. So 3 longs. Am I reading this right, Pete? 3 longs into a triple termination condition, even against 3 divergences. And then you said, wait a minute, that's going down. Nice recovery. This is why I stress every day, guys. They might break. But gosh, let them break. Let them break. It's easier if you let areas break. You cleaned your spark plug and forgot to hook the ignition wire to the lawnmower. Magically, it started on the first pull after you did it right. That's funny. You know, I had a neighbor give me a lawnmower, Andy. They were so mad it wouldn't work. You can have it. They went and bought a new lawnmower. And I got it over to the house, and I'm a little mechanically inclined. I put gas in it, and it worked for the next 6 years. I tried to give it back to them. I was like, here, let me give this back to you. There's nothing wrong with it. And they were like, nope, I already bought one. You can have it. And I used that lawnmower for the next 6 years. All I had to do was put gas in it. But that's how we get in our own way sometimes. We just assume it has to be more. And Ron had this thing. He's like, you guys know how geese fly in an arrow, right? Like geese. And geese fly, and one side is always longer than the other. And he said he did this at a meeting once, and he asked a group of people, well, do you guys understand why? Do you understand why one side's longer than the other? And he got answers like, oh, it has to do with the scout, and it has to do with the weak, and it has to do with the direction and the wind shear and how it cuts through it. And guys, the answer is that one side has more geese. That's it. One side has more geese. And for whatever reason, we forget that it doesn't have to be difficult. That it doesn't have to be overthought. 50-50, perfect entry, strong top. Definitely a rough stop placement, Paul. We're so good at what we do. Just no reason. Still a good looking trade. Strong top, odds favorable, potential to break, beautiful entry. Just didn't work. No reason to give that much back. Just no reason. But Paul knows that, and he even said it. He goes, man, I could have saved a little money on the stop placement. I agree. You could have. And these are the things that you have to say. And then, Paul, I'm going to use yours as an example. As we talked about this earlier today too. This is another good look at it. Is sometimes I'll look at my large chart. I'll look at my large chart, and I'll start defining, where would I not want to be in a long anymore? And is that really the first place where I say, yeah, this just isn't happening? And it helps me make stops sometimes. I'm like, gosh, if I get to the wrong side of all this stuff, that's just probably not mine. And you even let divergence print against you on the large chart before the exit. How many dead people are in that cemetery? I've never heard that one, Rob. All of them? I don't know the answer to that one. Support creates an untradeable bounce. Did everybody see that? Market's continuing down. 50-50 fails. We're right into a mid band. All my triggers are below. Nothing to do over here. What do you guys want to talk about? We've got a little bit of time. I'd love to chit chat with you. Exit manage. So Cindy, let me give you a couple different things. And you know I'm going to beat the dead horse at first, right? No, you're beyond the dead horse. We're going to go and we're going to do this. Couple things. Second divergence for managing your trade. Do I need to make these PDFs for you, or do you have Microsoft Word? You have it? Okay. No worries. So every trade's got to be managed. And these are just those little blogs that I write, guys. Your trading plan gives you a set of conditions for entry, must give you the same mechanical approach to exiting. So often management is left to fear or greed, and they rarely do serve us well. So divergence or a loss of momentum can signal a decline in the move's momentum, guys. And understanding this prepares you to react should a second divergence print. And it lets you know not only is momentum failing when it's lower from a high or higher from a low, but the buyers can't even match the previous push. So Cindy, if I see a second lower divergence, this for me is a big red flag. And it says, I will take an exit. Why? Because not only can they not push up higher, but that's their second loss of momentum. And it's a visual that things are changing. But the cool thing is, Cindy, is it doesn't mean that the trade is over. It means that if it drops forever, you're out. But if you get a reversal bar, large chart still good, get back in. But what it does is it really eliminates that hope that the market does what you want. So that's a good one. That's one of the ones that has saved me an awful lot of money. And if you never get the reversal bar, then you never re-enter. So that's a solid one. Another good one, small chart 1-to-1s. If I'm in a long position and I reach these 1-to-1s, I'm out half my profit. And Cindy, that's the same thing. Like if you're on a 50-50, when you make it back to that fib that you're hoping is breaking, wonderful place. Take half of them, right? Don't lose anything into an area. Areas can hold. We're anticipating them breaking, but you can always re-enter. And then if divergence prints, just exit, right? And if there's a new signal, once again, you can go long. And if there's never a signal, well, then it keeps you from hoping the area breaks. And Cindy, you are so outstanding on your ability to get into the market in the right spots that taking an exit isn't a defeat, right? You have to believe that you're so good at this that you'll find the next trade. And you will find the next trade. Your chart reading, you could teach this class if you wanted to. So you start coming up with these rules that help. Well, I think you could. We'll have you teach a Spanish version. It'll be fun. And then it goes back to this. Está bien. You know, you guys remember Jose from the room. Jose's taking all of my videos, educational videos, and translating them to Spanish. He's coming on in the funding company. Well, he's already a part of it. So he is going to be our Latin America connection. It's pretty awesome. Your husband is coming on as well? Or Jose is your husband? Really? That's awesome. I love it. No. Makes me excited. I love it. So this is the other one, Cindy. Let me give you this one. And I dropped this in the room in the morning. And what this does is this gives you stuff to think about. So if you're in a high probability trend trade, the KISS plan initially is like everybody's plan. And then let me change this. Most people will grow outside of this when they learn to read indicators effectively. Yosavani? Mi esposa se llama Yeni. That's what all of her coworkers call her. With the J. So it comes into that second higher lower divergence from a 1-to-1, and then large chart areas, right? So Cindy, if you're in a trade, let me go back to it. If you are in a trade and you hit an area, what a great spot. What a great spot to take profits, right? So if you have a clear path, the next area. If it's a 50-50, what a great spot. And then if divergence prints off of the Fibonacci area, man, what a huge indication that things might go south. So let me put this one in there for you as well. But there's a lot of options for you. And I think one of the things, the easiest way to do it, Cindy, is go back on the trades that you took. Like go back to that great looking trade that you took. Let me see if I can find it. Hold on. Let me scroll up to it. It was there a minute ago. Here we go. There was your angry face. So when I'm working on management, and hopefully this helps you out, right? So I'll take this picture. Let me make it nice and big so that we can do it. And I'll give you the one that I annotate. But this is where you can go back and look at some trades. And then you could say, second lower divergence is an exit, right? But then look at this. Because the large chart is still doing what it does, this is my re-entry. And then maybe I get paid again right here, right? And you're like, oh, and then you take your beautiful entry. And what you can find, Cindy, is you're so stinking good, and once you have a plan, you get paid. Let's make it the color of money. You get paid from here to here. Well, you can't see that. That's a horrible idea. And then you get paid from here to here, right? And then you get paid from here to here. And when you've got these solid management plans where everything is defined, and you know it like the back of your hand, even trades that fail become an awesome opportunity to get paid, and you don't have to sit through all the nonsense. Because the nonsense, that little area of hope is where most people give it away. And I love your trading, and I think your entries are second to none. And now you're just going to learn how to get the most out of your great entries. Look at that termination. Creates an untradeable bounce, and then it breaks, creates an untradeable bounce, and now my small triggers are starting to roll. Are they trying to put in a bottom? They might be. And crude oil is just fighting, aren't they? Small triggers up, large triggers down, 3 divergences in the same price range. Hard to feel good about a long. Kind of tough to consider a short. 90% of your day is spent doing nothing. What do you guys want to talk about? We got a few minutes. We can still do it. We can make this happen, ladies and gentlemen. And I see somebody sent me a message. Just a heads up, guys, I don't ignore you for 3 hours. I just don't answer messages during class. I prefer to give my attention here. Everybody feeling pretty good? New users, day 3 or 4, it starts to come together. Once you commit to rules. NASDAQ? News today? Did you not check it this morning, C-Dub? It's done and over. That's not my job. My job's to teach you to read indicators. Your job's to make good decisions. Save that link. Check it every morning, because if you're asking at 11:43 a.m., you run the risk of getting just whipped. You have it? Right on. We're done for the day, though. Nothing till 1:15 a.m. Ron said he's going to call me at 1:15 a.m. and wake me up so I can make sure I'm not trading. Why the hell is he talking at 1:15? Who's listening at 1:15? Not me. Tomorrow's going to be crude oil inventories. What do you want me to talk you through? Oh, must be nice. High probability trend trade, good bottom, unfinished business, clear path, enter at the mid band. No, you did get stopped out. So, all right, Belt. Once again, you didn't write rule number 3 out. Take care, Andy. I'll just put it right here. Your large chart was nice. There you go. So, Belt, here's your triggers. Not one area inside of it. Do you see it? There's your area. And the challenge, man, is once you get to the wrong side of those triggers, it's a crapshoot. Once you get to the wrong side of those triggers, man, everything changes. So what happened is the verbiage of rule number 3 keeps you from taking this trade just arbitrarily at a mid-band. And fortunately, it gave you a bounce. And then once it gives you that bounce, there's your new stop. Right below that. So that's a lot of hope, isn't it? And then C-Dub, I'm going to do it for your picture as well. I'm sorry, not C-Dub, Belt. Belt, are you with me? Is that where you're taking along? Probably not, right? That seems way out of line for a long. And the only place where I say, well, maybe, is at the fib. So the stop doesn't make sense. And that's the other thing that the trigger lines do for you. The other thing that those reversal bars do for you is they give you something where the market said, hey, we're going up from here. Protect yourself. And this is about a $70 difference between where the very basic rules-based stop is and where you allowed yourself to be taken out of that market. And I want you to see something, and this is what people don't get. I'm going to cut your $70 in half and call it $35. And there's 252 trading days in a year. And that's $8 grand. $8 grand over the course of a year from leaving too much risk on trades, from not listening to your indicators, not having a plan for exit. And then if you turn that into what it actually was, right, that $70, and this assumes it only happens once a day. What if you're doing that same hope look 3 times a day? It's crazy how much stop placement can save over the course of a year. It's amazing how much having the rules. Oh, dude, you're doing it perfect. But the lessons are the same, right? Whether it's real money or fake money. If you're putting your stop here because it's sim and the market just miraculously goes up from right here despite not having advantages, all you're doing, Belt, is you're teaching yourself to break your rules. You're teaching yourself to use asinine stops. So one of the biggest things, man, you got to practice like you want to play. Well, you need a reason for stops, right? Initially, so check this out. The way I teach stops every morning for new users is that your initial stop is 4 to 5 ticks outside below the triggers. Your triggers are at 12 or 13. You entered where a rules-based stop should be, saying, you know what, this probably isn't going up here. And when you think about it like that, when you think about stops go where the market shouldn't, if you sit in on the first half of my classroom when we talk about entries, and you see this picture every day, then it starts to paint a picture in your head that says, wait a minute, taking entries here where Nexgen teaches me to use my protective stop for the first time in one of these trades, maybe that's not my best entry. And then if I'm way down here, then it makes even less sense. Does that make sense, Belt? But what you're doing right now on Sim is perfect. Because you're like, I'm not 100%. So let me do some stuff, right? Let me take some pictures. Let me post them in the room. Let me get some feedback. Yeah. Dude, break everything. And you're killing it because you're putting it in the room. So I love it. I love it. I think the feedback is where forward progress happens. Same look, what, Rob? It is for me. The things, my brother, I got a great lesson this morning. I totally pussed out of a beautiful trade, and he turned it into a full-blown lesson for me. He annotated my charts and gave me a trigger line lesson. He gave me a tops and bottoms lesson that I had apparently forgotten for some reason. It's close, right, Rob? So let's look at it. I'm not sure what that means. Same looks from ES. It's odds favorable momentum. It's only the potential to break. It's no divergence. And it looks like the market stopped right at the top of those triggers. And I don't know what happened next, but it is coming from a bad top. But if that reversal bar prints, that's pretty low risk. So I'd be curious to see what happened next. I'm a big fan, guys. You can show me like what you see in the moment. What happens next? Where was that trade? Was that it? No, because that was right into support. That was around 11.18 was your pullback. This was it right here. So look at that. Right off the bottoms. But Rob, directly into a termination condition. Did you get with Jason on fixing your charts? Let me see. You do have synthetics there. We've just got a little different data. There's a little discrepancy between us. That's okay. Trade your charts. But the top of those triggers is exactly where it stopped, right? Does everybody see that? That's what I want you to see. In Belt, this is kind of a good one to go off of what we were talking about on stops. Top of those triggers stopped at cold. That's exactly where this upward progress stopped, right on those large triggers. That's how we come up with the stop placement plan. Pretty cool, right? There's no reason to put it way the hell up here. We know where it should stop. We'll give it a little breathing room, and then we'll see what happens. Great class today. Tom, you're really quiet today. How are you doing over there?